Hey guys, welcome back to another episode of T2SMC Trader. In this video, we are going to simplify the concept of the weekly bias in ICT concepts. Understanding the weekly bias will help you to increase your win rate by finding better entry setups and having a clearer view of the market's overall conditions. If your entry models aren't working well in a lower time frame, it's crucial to identify the direction of the higher time frame. While weekly bias seems complex, this video aims to simplify it into an easily applicable strategy that anyone can use on the chart. So, if this interests you, be sure to hit the like button to support us in creating more videos like this, okay? Also consider subscribing to our channel if you are new, as we regularly publish advanced trading concepts. So viewers, let's go to the video. At the end of this video, I will add the gold weekly analysis as well. So watch me until the end. Here is dollar index weekly chart and all the levels you are seeing over here. I'm doing this in live. Okay, every single week I'm marking in these levels one after another. So I had this from the beginning. Last week, I told that I'm expecting that it will respect this propulsion block and it will take this buy side liquidity. So I was bullish for dollar index last week. It was expanded higher, but not that much expansion I got from last week. This week also, I'm expecting the same thing from weekly chart. I'm expecting market will go toward this buy side liquidity and finally this buy side liquidity. So my direction from the weekly chart for dollar index is bullish. As you can see, this bearish fair value gap, inversion fair value gap, the market has closed above the constant crossband of that inversion fair value gap. So simply I'm thinking that next week it will be the continuation of the expansion toward the buy side liquidity, but the Sunday opening it can change everything. So make sure that you actually watched carefully the Sunday open or the Sunday gap. Okay, if there is any gap, it is really impactful for the weekly analysis, but I believe that it will go toward the buy side liquidity. If it started to go, if it started to fall, then obviously this propulsion block should be broken. So in that type of situation, my whole weekly analysis will fail and we will try to scalp from 15-minute chart to 1-minute chart. So 15-minute chart will be our higher time frame for liquidity and the fair value gap, and 1-minute chart will be the time frame for executing the trade. So from my weekly chart, I'm expecting that market will go through this every level and it will go until that buy side liquidity. You can see this order block over here. It has been respected previously, then market went lower, tapped to this propulsion block. Before tapping this propulsion block, previously it has traded this order block. Before that, inversion fair value gap, it left the breakaway gap. This breakaway gap is giving me the confirmation that market is going for the buy side liquidity. This is the monthly fair value gap, low, high, constant encroachment. This is the bearish monthly fair value gap. I would love to see market will go above this constant encroachment of that monthly fair value gap, because it's been a long market is just going sideways. Okay, so if you see this is sideways, there is no movement, there is nothing from the from the weekly chart. But this week I would love to see that market will go at least take this buy side liquidity. If it has more interest, then it will go until that buy side liquidity. Before coming here, what else do you need to think or see? The calendar. This calendar will help you to identify the volatility of our coming week. You can see this Monday we have some kind of red folder news around 8:30, so it can be little volatile, but either way, depending on our narrative, we know Monday is the accumulation day, so I am expecting high volatility accumulation in Monday. Then Tuesday we have 8:30 news, red folder news, core retail sales, that will be volatile. Wednesday we have the bank holiday, so we don't have any trade in Wednesday. We can't trade in Wednesday, it's forbidden. Thursday we have unemployment claims. I believe that it's gonna be very nice to trade in Thursday. And Friday we have PMI. So whole week we have the chance to trade except Wednesday. So from Monday to Friday, except Wednesday, we'll be able to trade. That's my belief. Okay. So let's go back to dollar index one more time. Over here, when you see this breakaway gap is over there, and from weekly chart, I'm really expecting that market will keep going higher and it will take those buy side liquidity. But if I'm wrong, then market can tap to this order block one more time. That is called order block retest. Then it can fall again. But to be honest, I really don't want to see that. Let's go to daily chart. So from daily chart, what I am seeing here, I have this relatively equal lows, some sell side liquidity around that area. And this was the bearish fair value gap. I was expecting that if market really would love to go higher, it will break this bearish fair value gap. This was the fake breakout. This is the confirmation of this bearish fair value gap breaking out. Okay. At the same time, it is trading this order block around that area, but I'm not going to give that much attention to that bearish order block. Instead of that, I would love to see it will use this bearish fair value gap. It will use this as a support, and then it will go toward that buy side liquidity. If you look over here closely, it has taken some liquidity around that area. It has taken the liquidity. Then this is your market structure shift. Price tap to this daily fair value gap. Nobody closed below the constant cost band of that daily fair value gap. Then it expand higher. When it expand higher, the lowest down close body close candle is my order block. So if market is overzealous, it can tap to this order block. Then it can expand toward the buy side liquidity. Here, this is the relatively equal highs from both weekly and daily chart. And there I have some buy side liquidity as well. So this is how I am going to predict that market is going actually toward the buy side liquidity. When it can fall, if I see this order block is not respecting, for example, it didn't reach even until that order block. Instead of that, it keep falling and closed below the min threshold of that order block. That means the 50% of that candles. When market will close below that one, yeah, in that type of situation, market can go toward that sell side liquidity. Finally, maybe until this inversion fair value gap or the last fair value gap from daily chart, it can go toward that. I am not expecting that. I would love to see that even if market fall a little bit, this order block will be the last line, or the min threshold of that order block will be the last line before expanding higher. So keep that in your mind. From hourly chart, if you see from hourly chart, this was the new week opening gap. Price went through this new day opening gap, tap to this hourly entry fair value gap over here. So market has taken some liquidity, then went higher, gave market structure shift, entry fair value gap, last fair value gap. Market tapped to this entry fair value gap, went higher. If market want to go lower, this last fair value gap should be the last line. And remember, this is the line. This line is the daily order block. So the min threshold will be somewhere here. If really market would love to fall, it can reach until this last fair value gap from hourly chart. After reaching over there, then market should keep going higher toward the buy side liquidity around that area. If market is not interested to fall, then this order block should be the last line, because here I have some last fair value gap from hourly chart as well. Okay, so market easily can reach until that area, then it can expand higher. So why that information is important? If you are trading and you have seen that market is going lower, don't just think that market is just going for forever. Okay, it's going for that sell side liquidity, because when market will fall, it can reverse from any of this level and then it can go toward this buy side liquidity. So keep that in your mind, because narrative works perfectly. I have already built some videos in my channel about the narrative. If you know how to use the narrative, then you won't get panic when you will see some kind of lower run. So until Thursday, it can keep falling. Then around using Thursday and Friday, it can keep going higher and for that buy side liquidity. Or maybe market will keep going higher until that buy side liquidity, as I'm looking for buy down. If market would love to fall, obviously it has to break this last fair value gap, and if it break this last fair value gap, I will start to think that market is going lower for this sell side liquidity. Before that sell side liquidity, I have this sell side liquidity. Okay, so these lows and that low, they are relatively equal lows as well. From hourly chart, it will go toward that sell side liquidity. That's all for dollar index. Let's go to Nasdaq. So this is Nasdaq monthly chart. If you remember long time ago, I marked this is standard deviation. How I will mark that? I have already explained that. There was 1 minus 1.5 standard deviation. I told that I don't want to see that market has done its upper run until reaching to that minus 1.5 standard deviation. When market reached to that minus 1.5 standard deviation, market went lower, tapped to this monthly order block. See over here. Let me mark it actually. It tapped to this monthly order block. After tapping to this monthly order block, boom. Now it is very near to minus 2 standard deviation. But my intention is market should not reverse before minus 2.5 standard deviation. So simply I'm thinking that if market keep going higher, if market would love to fall, it should fall from minus 2.5 standard deviation. So I'm also bullish for Nasdaq. I'm also bullish for Nasdaq. Now here is the part where I'm expecting bull run for dollar index. Why I'm expecting the bull run for Nasdaq as well? The reason is Nasdaq is not going to respect dollar index 100%. They can go toward the same direction. It's simple. They can go to the same direction. If you look at the last week this is also bullish. Dollar index was also bullish. So they went toward the same direction. In that type of situation, actually we see some kind of high resistance liquidity run, and you know that from Thursday and Friday price action, it was really high resistance liquidity run. Okay, so yeah, still I'm expecting from the monthly chart that Nasdaq will keep going higher. This is the monthly candle. Don't think there will be another candle. This is the candle which should expand, little higher, and around the last week of this month maybe it will reverse a little bit. So I'm not expecting it will reach until that minus 2.5 standard deviation by this month. At least I'm thinking that it will touch this minus 2 standard deviation. After touching that minus 2 standard deviation, then it will go a little lower from monthly chart. But from the monthly perspective, I'm expecting bull run. Let's go to weekly chart. So from weekly chart, you can see market, I had this order block. I marked that order block, and now it is not over there because I cleaned almost everything. So from weekly chart, market has traded that weekly order block. Body respected that order block perfectly, and it reached until the last order block from last down close candle as well. But when I have seen this consecutive order block, I actually marked that consecutive order block high. Okay, the open. And either way, it respected that order block, then it went higher. Before tapping to this minus 2.2, I'm not expecting market will go lower, but at the same time, I'm thinking that market will keep expanding higher toward that minus 2.5 standard deviation. So I'm expecting same thing like dollar index. It will keep going higher. When I'll be in lower time frame, it will be much more easier to understand for you guys what you should think and how you should think. But from looking at this weekly candle, I'm thinking that market will keep going higher. But if market is not interested to go higher, maybe it will come to this propulsion block over there, though it has been traded that propulsion block already. Here, this is the propulsion block. I'm just marking it as a order block, but this is propulsion block. And let me actually mark this minus 2.5 standard deviation and minus 2 standard deviation. Okay, then I will just remove this standard deviation or P. So here, this is the minus 2 standard deviation, minus 2.5 standard deviation. You can see market went through this propulsion block, then tap to this propulsion block, boom, it went higher. Very near to minus 2.5 standard, minus 2 standard deviation, above it minus 2.5 standard deviation. So I don't expect that market will reverse even before touching this minus 2 standard deviation. So when it will touch this minus 2 standard deviation, you will start to think two ways. First, maybe it will give a retracement until that propulsion block, or maybe until the 50% of that candle, or it will go through this minus 2 standard deviation and it will keep reaching until that minus 2.5 standard deviation. So from weekly chart, this is two type of situation. You can expect some reaction from minus 2 standard deviation. That reaction can expand lower. It can go lower. In that type of situation, we will get low resistance liquidity run, because I'm expecting dollar index will keep going higher. Okay, so if it give me the reaction from minus 2 standard deviation, then I will get some low resistance liquidity run, and maybe I will be able to get some great trade. If it keep going higher, go through this -2 standard deviation, then I will start to think that market is reaching for that -2.5 standard deviation. As you can see, market is at the all-time high, so I really don't have anything over here except expecting the bull run. As ICT told, when market is at the all-time high, you should keep looking for buy until it proves you wrong. Let's go to daily chart. So this is the daily chart. Let me remove this. Okay, and this thing. Okay, so here this is the daily chart, and you can see market tap to this daily order, weekly order block, perfectly tapped to this weekly order block. Nobody closed below this weekly order block. Then it expand higher, tap to this fair value gap from daily chart. Market has taken some liquidity, market structure shift, fair value gap, tap to this fair value gap, boom, market went higher. It is keep going higher. At the same time, I have this last fair value gap from daily chart. This is the last fair value gap from daily chart. If it tap to this -2 standard deviation and then it start to fall, this last fair value gap will be my first target. That market, I will start to believe that market is reaching for this last fair value gap. If market actually consolidate around that area around Monday, and then it tap to this fair value gap, the entry fair value gap, then keep going higher before tapping here. Okay, whatever I'm telling you here is actually market didn't touch that -2 standard deviation. Instead of that, market has started to fall. Okay, in Monday it started to fall by accumulation, something like this. Then tap to this entry fair value gap. Then I will start to think that market is actually going toward that -2 standard deviation in Tuesday. This is also possible. After taking the Monday low, it can reach toward that -2 standard deviation, and then we will see if it can go through that -2 standard deviation. Then this will be my target. If it respect that -2, then I will think that market will go until that last fair value gap, maybe until this propulsion block. Remember the propulsion block from weekly chart, or maybe until this last fair value gap from daily chart as well. So this is also the last fair value gap to that specific leg, and to here to here, this is the last fair value gap. So this is how I will see how market will work. As it is at the all-time high, trust me, it is the difficult time to trade because market is at the all-time high. We don't have any other level. So whatever I have marked I have marked those level depending on my experience and depending on my study of ICT concepts. This is hourly chart, and from hourly chart you can see that market left some hourly sell-side liquidity here, very clean sell-side liquidity. Then below this sell-side liquidity, I have this last fair value gap from hourly chart. At the same time, I have some sell-side liquidity around that area as well. Finally, over here, a lot of this place imbalances over there. This perfect accumulation phase, that means this is also the sell-side liquidity over there. If market tap to this -2 standard deviation, then if I see some kind of lower run or lower market structure shift from hourly chart, I will start to think that market is going toward that sell-side liquidity. So this sell-side liquidity is above the last fair value gap of daily chart. This was the last fair value gap from daily chart. This is the entry fair value gap from daily chart. So I will start to think that market is going toward that sell-side liquidity from hourly chart. And after taking this sell-side liquidity, market will tap to this entry fair value gap. Then we will see if it wants to go higher or higher, or it would love to keep going lower. If market doesn't tap over there, instead of that, if it keep falling, I believe that I won't have any opportunity to trade, and I will just see that how it has taken that sell-side liquidity, and then when it will be there, I will start to look for buy again until this -2 standard deviation. So that's all for Nasdaq. I believe that it will be little insightful for you. Now the Nasdaq trader or the future trader, I'm done for you guys. The weekly analysis has done. I'd love to go for gold now. So this is gold, and you can see over here, this was the relatively equal highs or the all-time high. Market has taken the all-time high already. Okay, so all-time high has taken, then market has taken this all-time high one more time. So from weekly chart, it has taken the all-time high. Here, the down close candle is my bearish breaker block. Now, it's not bearish breaker block yet because market didn't close below this low. So I am not thinking this is the bearish breaker block, but I was thinking, I believe that it will be the bearish breaker block. Okay. Now, at the same time, you can see market when taken that it has taken by a big run this all-time high, give me a retracement, went higher, take that high again. Okay, that high has taken over there one more time. Then market fall. It has given me the market structure shift over there. So this is the market structure shift. When it has given me the market structure shift, all I missed is the parabolic gap. There is no parabolic gap. That's why I'm thinking that this is gonna be the order block. So market is actually respecting the order block and it will keep falling. This week I'm expecting fall run. That means market will fall. If it go little higher, I will mark the 50% of that. Just let me mark it actually. That week, this week 50%, I will keep looking to that 50% of that week. And if it failed to reach until that 50%, that's the best scenario for fall. As dollar index, I'm expecting it will go higher. So I'm expecting that this guy will keep falling. This gold will keep falling. And if it is overzealous, it can reach until the 50% of that week, then it will fall. I'm expecting market will fall. At the same time, though it's the market structure shift, at the same time, this is the relatively equal lows. Okay, so all of these things is my sell side liquidity. If market go a little higher and fail to break this constant crossment, I will expect market will go toward that sell side liquidity. Then it will work. It will close this bullish parabolic gap perfectly. Then it will go toward this parabolic gap over here. This will be the parabolic gap. It will go toward that bearish parabolic gap. Let's go to daily chart. So from daily chart, what do you see? Market has taken the all-time high. All the buy side liquidity has taken. After that, gave me a market structure shift from daily chart. This is the market structure shift. After shifting the market structure, this is the parabolic gap, entry parabolic gap. This is the breakaway gap. Market tapped to this entry parabolic gap, went lower, made this relatively equal lows, the shallow run, which is called the obvious liquidity. Then market went higher. It has traded this order block. See this consecutive order block. This is the highest up close body close candle, and this is the consecutive order block because this candle closed below this both candle. So it is trading this order block, consecutive order block. At the same time, mark the 50% of that consecutive order block. So from here to here. So this is the consecutive order block. This is the 50% of that weekly week. This is the 50% here, the consecutive order block. That means the mean threshold. That means if market is overzealous, it can reach until that mean threshold. Then it can fall toward this sell side liquidity from daily chart. And if you know the narrative, you already know how to work with this. But if I see market close above these two level, the 50% of that week consecutive crossment, also the 50% of that consecutive order block, that means the mean threshold, then I will expect that market is going toward that all-time high one more time, because this is also a shallow run. Here this is also a shallow run, which is the buy side liquidity, obvious buy side liquidity. At the same time, this is the all-time high. So either way, this is the strongest buy side liquidity. Okay, so if market can close above those level, I will expect that market is going toward that buy side liquidity at least until this last parabolic gap. It will work toward that last parabolic gap from daily chart. If you ask me, gun to my head, I would love to see that market will respect, even if it went little higher, it will respect any of these two level. Then it will fall toward this sell side liquidity, and finally it will reach until this daily last parabolic gap. So over here, this is my last parabolic gap from daily chart. Okay, so it will reach until that daily last. It will go toward that last parabolic gap. That is my expectation from daily chart for gold. Okay, let's go to hourly chart. So from hourly chart, you can see market actually fall. How beautifully it has fallen from there after trading the last parabolic gap from daily chart. Then market, how beautifully it fall. When it fall and reach until that area, simply here it has made some relatively equal lows over there. As I have this sell side liquidity from daily chart, I'm not interested to mark those relatively equal lows. Instead of that, I would love to keep this. And right now price is trading this last parallel gap from hourly chart. At the same time, above this last parallel gap, I have this last parallel gap from hourly chart. So if you see closely, the 50% of that daily consecutive order block, that means the mid threshold, and the 50% of that weekly wick, both of them are inside this last parallel gap from hourly chart. So if it really would love to go higher, this is the perfect level where market should stop, and then it should fall toward that sell side liquidity. Now if it go toward this sell side liquidity, I will expect that market will reach until this last parallel gap over here. So this is my expectation so far from the hourly chart, but everything can be changed. I'm just giving you my expectation, the way I do the weekly analysis. This is the way I depend on price, and as market, the current situation of the world is really so difficult, and it impacts on the trading as well. It's really so difficult to predict the price, to get the precision from this price action. Either way, we believe that I'm coming in live every single day, though I'm coming through the Nasdaq, but I will try to come some London session with gold, and we will see if we can do something over here or not. So in short, this is all for that video, that weekly analysis video. If it really helps you, don't forget to give me a thumbs up. At the same time, if you're new to my channel, don't forget to subscribe to my channel. Okay guys, so until the next video, cheers.